Today, we're going to dive into 4 factors that can affect the San Diego real estate market. Obviously, there's a lot going on in the news right now. How is this going to affect home prices in San Diego? How is this going to affect the market as a whole? That's what we're going to dive into. And it's not all doom and gloom out there. The San Diego real estate market's going to continue to move forward. There's still going to be people buying. There's still going to be people selling out there, no matter what's happening. And that's what we are here for, to help you navigate the San Diego real estate market. I'm Chris Erickson, and we have a real estate crew right here in San Diego. And if you guys are thinking about making a move, you got some questions, all of our info is right down below, whether it be next month or next year. And feel free to subscribe if you like the information that we're putting out here. Throw us a thumbs up. We're making new videos every single week, but let's get into it. One of the biggest factors that can affect the San Diego real estate market is interest rates. Back in 2020, 2021, portions of 2022, interest rates were relatively low. Obviously, the market reflected that. That's when we were having a lot of people in the market, causing prices to go up, multiple offers, all that kind of stuff. You guys know that. As interest rates rose over the next few years, the number of sales here in San Diego went down quite a bit. We've been hovering in that 7% range for the past few months now, but recently, over these past few days, interest rates have dropped by quite a bit. So from about February until about July, early July, interest rates were above 7%. They dropped down a little bit. And then this drop that we saw over the past few days is one of the biggest drops we've seen in a long time. It dropped all the way down to 6.34%, bumping up a little bit today as we're making this video. Now, all these charts, just be aware, these are just trends. These aren't necessarily interest rates that you're going to get. Sometimes they can be higher, sometimes they can be lower. These are all just kind of see what's going on in the market as a whole. I chatted with our lender actually earlier this week to see what he was seeing out there in interest rates. He said he's looking at like 6.5 to high 6s. So somewhere in that range. That's for good credit, good qualified buyers, all that kind of stuff. So interest rates can fluctuate by quite a lot. Your interest rate, what you're actually going to get on your loan, can be quite different. So make sure to have that conversation with a lender before making your decision. So 2 things with interest rates. First, buyers out there. As interest rates drop, we tend to see more buyers come to the market, especially as we get towards that 6% range. Now, there's no cutoff line. Okay, at 6%, we're going to see a big flood of buyers come in, but we tend to see bigger changes in buyer behavior as far as buyers jumping into the market, making that decision with the big dips that we do see or big jumps in interest rates. If interest rates jump by a lot in a short amount of time, it might put more buyers on the sideline. If interest rates drop significantly in a short amount of time, we might see more buyers drop into the market. So at what point do a lot of the marginal buyers come back into the market? I don't necessarily know. Obviously, the lower interest rates go, the more buyers we tend to see in the market. So as we approach that 6% level, just a psychological level where people are like, that's much better than 7. So maybe now is the time to buy. But even within our own CRM, within our own database, we have a lot of buyers that are there. They're looking at homes. They are in the market technically. They're not necessarily making the jump yet. So at what point do a lot of these people decide that that is the time to move? Obviously, that's a choice that you have to make yourself. But at some point, other buyers are going to be there too. So as more buyers coming into the market, that typically is going to mean more competition out there. So just be aware, as interest rates do drop, expect more buyers into the market. And for sellers out there, I think interest rates affect them as well, because a lot of sellers are buyers on the other hand, right? When they sell their house, they are still going to have to buy a house in the future. So it does affect sellers as well, especially sellers who got in their house 10 years ago. Maybe they have a super low mortgage rate. Obviously, prices were a lot less during that time as well. Maybe they refied during the earlier parts of 2020, 2021, and are super comfortable at where they are. Looking at the numbers it would take to move to the next house, and it just doesn't make sense at the time. But at some level, that does make sense. So at that point, we do see more sellers come on the market, I believe, as well. Now, a lot of sellers are, like I said, are buyers too. So does that add significant buyer demand and push prices up? Or a lot of buyers selling their houses here, moving elsewhere? We've seen that a lot too. So the interest rate factor really depends on at what level do interest rates hit, where it opens up some of that marginal demand, the number of buyers out there, and that marginal supply, the number of sellers out there. The next factor that can affect home prices here in San Diego and the real estate market as a whole is economic conditions. And something you hear on the news a lot right now is recession. How does that affect the San Diego real estate market? Now, we'll get into how a recession could potentially affect home prices, but there's a few other things to think about that will factor into there. The unemployment rate, where is that right now in San Diego? We're sitting right at 4.3%, which is right where the national average is. How is consumer confidence, which we'll get into in another point down here in a little bit. More importantly, what happens to home prices during a recession right here in San Diego. So let's take a look at the past 5 recessions to see what happened. Back in 2020, we had a little mini recession at the beginning of the pandemic. During that time, there was a brief pause in the housing market. After that, interest rates got dropped super low. Market took off after that. And this chart right here is just an index. It's a broad measure of the movement in home prices. So it's not the actual prices, obviously, but you can see what direction home prices were going in. Back here in 2008, obviously, we had a significant drop in home prices. And so residential real estate was one of the factors that did cause this recession. We go to 2021, the dot-com recession. You can see housing prices just kind of continued to tick up. We didn't see a massive spike. We didn't really see a drop there. This wasn't caused by housing during this time. So you can see home prices just kind of did their normal steady rise. Now going back to 1990 into 1991, there was another recession. There was a lot of factors that went into this one. But you can see during this time, there was a slight dip in home prices. There was a little bit of a downturn. It actually went a little bit further going into the mid 90s before we did see that pick up. And going back to 1980, you see the first little pop of the recession. Actually, prices went up. The second part of the recession, prices did go down, fluctuate a little bit, came out just a little bit below where they were prior. During this time was a time of high inflation. Interest rates were insanely high. Now I have the 30-year fixed rate mortgage average up here. You can see we had one peak at just about over almost at 16, and then it peaked out again at almost 19%. So mortgage rates were slightly higher back then. You can see where we are down here right now, sitting right around 7 or so. As you can see, every recession is going to be a little bit different in the housing market. It's going to depend on what caused it. There's a lot of economic factors that can affect the housing market. The next factor that isn't going to necessarily make prices go up or down, but just affect the way real estate is done right here in San Diego is a few changes and the new rules for real estate. If you guys have seen articles, death of the 6% commission, all this kind of stuff, you're going to probably start seeing it more and more come out because those new rules are taking effect in Southern California in the next week or so. There's a lot of confusion behind it. And in the future, as we get more data, as we see how it all shakes out, we'll make a full video here. The first thing with buyers, if you are working with an agent, you're going to have to sign a buyer broker agreement. Basically sign it ahead of time, some terms that are going to be important. How long are you going to work together? What is the commission that you're going to pay the agent? And a few other things within there. And these are going to have to be signed before you actually go see a home. Now, can you go see open houses? Yes. Can you go do your own thing? Yes. Can you represent yourself? Obviously. But if you are going to hire an agent, you're going to have that agent work with you. You're going to have that agent work for you. You're going to partner with somebody. Then you are going to have to sign this right up front. When I make the full video, I'll dive into what all entails there and give you guys some more insight into what that actually means. Now, if you're just getting to know somebody, you just get to know the agent. You don't know if you really want to work with them. If you're like getting their vibe, are they going to be a good fit for me? You had maybe your initial chat, maybe your initial call. If you want to go see a property or two, you can make that happen. You could do like a 1 property showing, a 2 property showing, whatever it might be. It doesn't have to be this long drawn out thing until you get comfortable with that agent. Now, if you did buy one of those homes, then you will be working with that agent if you did write an offer. But it is one thing that will affect the buying process going forward here. And the second thing that's going to affect for sellers, you're not going to be able to offer compensation to the buying broker or the buyer's agent through the MLS. So can you still offer it? Obviously, yes. There's some other things that we need to go over. And like I said, I will make a full video on this so you guys as a buyer or a seller have a little more information. In the meantime, if you got questions, like I said, feel free to reach out. And the fourth factor that can affect the San Diego real estate market is the psychological factor. How are people feeling? Like I mentioned earlier, consumer confidence. How are people feeling out there? Are we getting stimulus checks? Are we feeling rich? Is the stock market up? Obviously not in the last few days. If you're looking at your portfolios, you're like, my stock is down. You're just not feeling as good, you know? Even though it's on paper, you haven't sold anything, just looking at it is not a good feeling when your investments are down. And psychologically, you're thinking, hey, I don't know. My stocks are down. I don't know what's going on at the job. I don't know what's going on with everything else. So I don't know. Maybe tonight, right now is not the best time to buy or sell. So a lot of that plays into the home buying process as well. We're also in an election year. How is that going to shake out? What's going to happen with policies? What's going to happen with all that kind of stuff? So a lot of people may sit on the sideline as well. But with all that said, there is going to be opportunity as well, because if a lot of people are sitting on the sideline, especially coming in the later part of the year when there's less buyers out there anyways, there is going to be opportunity in the market. And like I said, for sellers, it's not necessarily a horrible thing either. It just comes down to getting your house ready, getting your house priced properly, just doing all the marketing properly to get your house sold for the most money. So there's going to be opportunities out there, whether you're thinking about buying, whether you're thinking about selling. As always, if you want to dive in a little bit more, you got some questions, feel free to reach out right down below. I'm Chris Erickson. We got a real estate crew right here in San Diego, and we got your back when making the move here in San Diego.